One.
Over the years, we've made a lot of calls on this show, some good ones and some bad ones. We're going to talk about the Ackman bottom a little bit more today, especially after Pump and Powell did his job. There have been other great calls in the past. We're going to review one in just a few minutes. Earnings looking good. A lot of green on the screen, unless your solar edge. We got a new guest to talk about volatility in the options market and how we can use it to your advantage. It's Thursday and it's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Welcome, traders and investors. 3-day winning streak on our way to 4. Up 24 and a quarter handles, trading near the highs of the pre-market session at 42.80.50. Buck pulling back. Oh, that's substantial. That's down 76 cents. That's certainly helping the market. The bonds not only over 110, over 111 at 111 and a half. Crude getting a bounce, will not go down into that 70 handle. Up a $1.08 at 81.52. Gold up 870, but still just can't make 2000 support. Silver joining the rally today, back over 23, up 37 cents at 23.16. And Bitcoin finally cleared that 35K hurdle. We're up $785 at 35,750. Let's bring in Triple D here. And Triple D, I'm going to test that memory of yours.
Why? My memory sucks. And I'm sick.
I know. You haven't been sick in a while.
No, I know. I was due. It's a light cold, but it's annoying enough that I'm like kind of congested. I thought I might be getting sick, and then the last day, it's just kind of hit me.
Okay, so you've been talking about, I'll put the TLT up here. You've been talking about the Ackman bottom, right?
Oh yeah.
And we're farther away from it now. Do you remember another bottom that was called in the market? It was by me. It was 2016, and it had a name with it too. And it was associated with the bank. The Jamie Dimon bottom. Yep, the Jamie Dimon bottom.
Yeah, what was that though? Refresh my memory. I don't remember why.
This is April 7th of 2016. The market
I remember us selling off in 2016.
You don't remember us selling off?
No. I remember just a bull market from like 2011 to like 2021.
Well, there was at least I thought there was a point where the market was in the ditches. But anyways, Jamie Dimon bought $25 million worth of stock in mid-February of that year. At the time, the market did not look good. I can't remember what happened the entire year, but so now we had the Jamie Dimon bottom, which we haven't talked about. Long time. I know he sold some stocks, so that was a pretty nice trade. But let's talk about the Ackman bottom. I mean, was Mr. Powell that dovish is my question.
I just think, honestly, Bill Ackman put some confidence back into the bond market. That tweet, we've covered our bond shorts, and people will say, oh, no, the bond market's too big. Ackman can't turn it. He did it. He turned it. The bonds wanted some vote of confidence. That was the vote of confidence, even though it wasn't like I'm buying bonds. It was like the cover the bond shorts. And we know that morning we turned around on the TLT. We turned around on the bonds. It was a huge day. We gave some back. We've been meandering and just hanging out for 5-6 trading sessions. But now we're trying to resolve to the upside. There's a good possibility here that bonds have seen their lows. There's a good possibility. It's not for sure. Never for sure. Nothing's for sure. But there's a decent probability that the bonds have seen their lows. And it coincides right with that Ackman tweet. So I'm calling it the Ackman bottom of the bonds. What does that mean? It's good for stocks because if bonds have seen their lows, that means long-term rates can start to maybe come in here a little bit. And then Powell, bring Money Mitch in here, please.
Yeah, I was going to say
Money Mitch in the conversation here.
Up, guys?
Powell really didn't say anything hawkish yesterday. He was pretty much steady as she goes, but didn't say anything to derail the confidence that is starting to build in the bond market. And we know as these bonds go is how the IWM and a lot of smaller companies with a lot of debt are going to go. So if TLT can sustain this rally and continue to stay above 85, I think there's a chance that stocks bottomed 3 days ago.
Well, the Ackman low is holding, as you guys can see on this screen. I'm going to leave him on my chart there. So
that's it. Leave it on there forever. It's the Bill Ackman bottom.
I love that.
Bill Ackman to the rescue. Is he going to come on the show or what?
He hasn't answered me yet.
They don't answer us. I mean, nobody gives Bill more love than we do, even though we gave him hate for years. We love you now, Bill. We've changed our tune. We think you control the entire bond market. Come on and tell us about it. Bill, Billy boy, come on here.
While I do,
Mr. Ackman.
He loves being called Billy boy.
I'll wear a suit. If he comes on the show, I'll wear a suit.
I won't. I'll shave though.
All right, guys. Now, one thing I did catch in that FOMC conference yesterday. This is not going to be a bullish comment. I'll just say that. I mean, I understand what you mean. Also, Dennis, that he didn't really get too hawkish, but there was one Q&A question that I think is important. What I always like to look at in the FOMC conference is how does the report compare to his answers in the Q&A? And is there something different there, right? So in the report, clear as day, they said that banking was sound, right?
Yeah, I saw that.
Sound and resilient. I think I even have here's the exact comment in the report. So the U.S. banking system is sound and resilient, but tighter financial and credit conditions for household and businesses are expected to weigh on economic activity, hiring, and inflation. And then he was asked a question about that, and I think his answer wasn't necessarily a strong answer here. He said that it's something that we're watching, and we do have issues with interest rates and also, funding and uninsured deposits in March, that the things went through in March and thereafter. So we've been working on with a lot of financial institutions to make sure that they have good funding plans and are good, and that they have a plan for how to deal with that kind of portfolio, unrealized losses that they have. We do think, though, that the banking system is quite resilient, and we have a handful of bank failures, but that is what we're doing out there, is helping those banks essentially. And so they're saying to me, they're holding up those banks right now. If they weren't there stepping in, these banks would fall.
I'm not sure if that's the case here yet, but I still think there will be more bank failures. So I think I'm still with you, Money Mitch, on that. I think that in 2024, we're going to see some more bank failures coming. Money Mitch just left. But he gave some pretty good comments before he left.
They're trying to get me out, man. They're trying to
still try. I know that's what it is. Powell just shut you down.
They're trying to shut me down, man.
Yeah. Big brother.
And that was a different answer than saying that the banks are quite resilient, right? Sound and resilient, but yet you're literally holding them up, and that a lot of them have massive unrealized losses.
They do. The mortgage books are really bad. As much as every U.S. consumer is happy that they obviously financed and they got their 2.5% mortgage or 3% mortgage for the next 30 years, there's a bank on the other side saying, "Oh my God, this is really bad." So
Dennis,
I mean,
are you getting lifted on any offers there? Are you getting lifted?
Joel's scared of the rally.
I'm not scared of the rally. I love the rally.
I've been trading from the long side here, so I don't mind the market going higher here. I'm actually long stocks right now. But let's talk. And we don't want to get. We've went through the banking stuff before. You kind of know where me and Money Mitch stand. I do think there will be more problems. I do think it's not the place I want to be investing in U.S. regional banks here. I think there will be issues. But I will tell you, in the short term here, going back to the Ackman thing, is the bond market has stabilized, and that's what stocks wanted to see. So you're starting to see a rally not only in the S&P, but IWM starting to participate as well. IWM probably bounced right where it needed to bounce here. Joel, go to the long-term chart so we can just talk about this. We talked about the potential for this bounce area here. 162.50, that was the October lows. We challenged that. Barely took it out, a little undercut and rally, but we took it out by about 50, 60 cents. Go back to April of 2021, or actually July, same area, 162.78. You can draw a line or blow that up on the bottom right chart. You can see it very, very clearly. Blowing it up even more here is the IWM bounced exactly where you wanted it to bounce. So that's good news for the bulls. I think there's a case for a short-term rally here. I think the rally, I think we're moving from sell the rip to buy the dip. I think we've done very well in this market, trading it from the short side for the last 3 to 4 weeks. I think the short trades, you got to take a back seat on those for a minute. Not saying you come in here and chase today. To Spinner's point, we've had a pretty good pop here in the S&P already. We do have Apple earnings tonight, but I think you've got to have that buy the dip mentality hat on here. We had evidence that it was working yesterday. AMD was not great, the earnings reports, but they found a reason to come in and just rip it higher. Yes, I'm still long that half size position of AMD. Did not add to it. One stock I did buy yesterday, or 2 days ago, actually. We were supposed to talk about it yesterday. We never got to it. I bought it 2 days ago, was NVIDIA. So I did add NVIDIA to my long-term portfolio.
I thought you did talk about that. Oh, that was
no, we talked in the pre-market show. I don't think we actually, maybe we did. Chad,
no,
I don't
we
remember.
We didn't.
We talked about.
Get there. We didn't
yes,
get there.
We never got to it. We never mentioned NVIDIA yesterday, and it was on the list. So I bought it 2 days ago, feeling like the undercut and rally trick was there. So the undercut and rally, obviously, it took out under 400, reversed on a dime. I'm in at 408, so I'm not in at the very bottom by Hero 392. I'm in at 408. It's 432 though 2 days later, so feeling pretty good about that buy actually. I talked about buying it, Joel, on the show. We talked about saying if this got down into the low 300s, I would back up the truck and load. But I was like, I took a small size position, half size position on NVIDIA, just a starter position, just in case this undercut and rally works. And I do believe the AI story is real. And I was saying on the show, I think NVIDIA powers the next bull market. So I want it part of my long-term portfolio. If it pulls back further, I will buy more. So I did not do the whole position. I did a half-size position on NVIDIA.
All right, let's get to SMCI. Let's start getting to these reports here. Supermicro Computers Q1 EPS $3.43, beats $3.20 estimate. Sales of $2.12 billion, beat the $2.06 billion estimate. Not a bad report after a really bad one last time. What do you think about this?
I like this stock, and the report was actually pretty solid. I think this is an AI play. I think this moves NVIDIA even itself. I think NVIDIA is trading up because of one, Qualcomm, but two, SMCI. If you were watching the trading action SMCI, NVIDIA ripped on the initial rip on SMCI, and then SMCI went red for whatever reason, went down to like 248. And then they pulled NVIDIA right back. And then SMCI just started catching a bid. They started talking about it on CNBC, and it started moving higher here. So it's up. I think you're buying dips. Again, not chasing. We're chasing the market to a certain extent. Even NVIDIA. Would I come in here and buy it at 432 today? Well, no, I just bought a 408 literally 48 hours ago. So, I mean, it's already popped 5%. So I don't think you're in an environment where you still want to chase. But I think you've got, the buy the dip hat on here now, where maybe Apple disappoints for whatever reason. Just saying possibilities. I don't know if Apple's going to disappoint, but I think there's underneath demand in a lot of stocks here now. I think this market has changed from sell the rip to buy the dip, and it changed 3 days ago.
Nice pop here. Let me get the 24-hour chart up here for SMCI. I remember you went on the initial plunge. I remember you went into that, Dennis, when it had the big gap, or maybe it was a couple days after. I remember you went in that one. You were just like, well, what the heck. Pre-market high is just over 270. Let's call that an after hours high at 274.86. Nothing on the dailies here to say that is a good number. If you're looking for more on the upside, oh, wow, next daily high, 289.49. So if you're shorting this thing just because you feel like shorting it, there's not a lot in here, folks. So
it's scary. I think we're not in the sell the rip camp here. We were in the sell the rip camp for the last month, correctly in the sell the rip camp. I posted my results. I did well last month again. Sell the rip, obviously, Christian was reaching out to me. Thanks, Christian. I mean, sell the rip has been working for me. I don't think we're in that camp right now. I think, like, if you're looking, this is the rip, I'm going to get short here. I think you got to be careful selling the rip, because I do think the TLT gives us reason for follow through. So as long as the TLT stays above 85, TLT turns around, starts crushing down back below 84, 83, 82. Okay, sell the rip starts to work again, but use it as an indicator. We talked about this on that level. Above 85, we should be buyers of stocks. We're at 86.10, another good day for the TLT. Yes, I'm long TLT. I have the half size position. I sold half at the loser. I think I sold around 84.5 or 84, which wasn't good, but I'm still long the half size. But it's not about that. It's about being the indicator here, about the indicator for your portfolio. And I think bulls have control as long as the TLT is above 85.
Yep. And I would definitely say that could last all the way to the end of the year, right?
It may last to next week. I mean, again, that's
We'll
what
see.
I'm using for the indicator. So basically, here's my formula, algorithmic traders out there. TLT above 85, I'm buying the dip. TLT below 84, I'm selling the rip. That's where I'm at. So
Hit the thumbs up
86
for
goes,
that one,
87
guys.
goes, I'm in the buy the dip camp.
I'll go
84
traders.
starts going, 83 starts going, I'm in the sell the rip camp. Right now, I'm in the buy the dip camp. It's why you got to continue to listen to the show. People will listen to the show, say last week Dennis was bearish, and he's dead wrong.
And I want to go ahead and jump in there and kind of give a vote of confidence. Dennis did tell me he was long NVIDIA. Him and I talked about it. I told him he was insane. He told me I'm stepping up to the plate. So I wanted to kind of put that out there. I know sometimes you guys don't get to catch those comments, but I'm always going to stand up and be transparent with you guys.
We were supposed to talk about it yesterday.
100.
Yeah, no, we were talking. Dennis, you know what you should explain a little bit, because, and we probably don't do this enough on this show, about, valuations and the way that you looked at it. And you talk about valuations all the time. And, there's a lot of people out there saying, oh, you can't buy NVIDIA now. This, when it's actually probably a cheaper stock now than maybe it was, before its last earnings report. Why don't you just give a quick 2 seconds?
Well, that's it. Dan Niles, had that interview on CNBC 3 nights ago and got me thinking about it. And he's like, NVIDIA is trading 26 times forward earnings here, if you believe the earnings are going to hit. And it's growing at 40-50%. Now, I think those growth rates, I think there's some pull forward there. So I'm not super, I didn't go all in on NVIDIA here. But I just start thinking about, I've said it on the show. We've said it for the last week. I think NVIDIA drives the next bull market, because I think AI is going to drive the next bull market.
And
I don't know if that's the case,
right?
but I'm like, I can't keep talking about NVIDIA driving and not own any. So I'm like, I should just, put my money where my mouth is. I knew it was like catching a falling knife, and it really was. Even with the undercut and rally trick, I was catching the falling knife. But I did a half-size position. I don't know if I'm going to be right. Maybe it's just going to fall over, and maybe Apple's going to disappoint, and NVIDIA's going to be back down.
Yeah, that'd be a big thing. Apple disappointing, and you got a jobs number. 818, we got to do some earnings. Mitch, you're driving the bus.
Qualcomm adjusted EPS $2.02, $1.91 estimate. Revenues of $8.665 billion beat the $8.51 billion estimate. They do see adjusted EPS at $2.25 to $2.45. This is above the $2.10 estimate. Revenues at 9.1 to 9.9 versus an 8.67 billion estimate. And my camera's just not liking pre-market prep, because yesterday, as soon as I got out of here, it was perfect on live trading, but I don't know what's going on there. I'm just going to keep working, guys. Keep working. That's all I'm going to keep flowing. So I'm going to be the voice in the back bringing you the earnings today. So definitely smash the like for that. What do you guys see on this Qualcomm? Of course, this is more business to business. Nice monthly candle, I think, because you can see the support there. Can it hold that monthly? What do you think about that, guys?
I'm still long Qualcomm. For those who say my long-term account is 1 month, I mean, in some cases it's longer than this. I bought this back, I believe, in 2016.
Long time ago
when Sean Udall was on the show, and it was his pick. And Sean, tech stocks, obviously he knows them very well, does a lot of research. This was his pick, and the valuation was attractive. I did sell half when it got to 120, so forever playing with the house's money. I'm still in it.
Can I add here for Qualcomm, because I did some research. I was reading over the weekend about their Snapdragon, and the Snapdragon is their new chip is pretty good, guys. It's pretty advanced, and they're going to be trying to bring it to different kind of laptops. And I think that this is really more and more just showing me how much competition Intel has coming for them. Like, it's going to be tough road in the chip business, right? AMD. You got, of course, you're going to have Intel. You're going to have Apple making chips. You have Qualcomm making chips. I mean, there's high competition in this space.
Huge competition in the space. I think there's room for a lot of them, though. I mean, chips are not going away. Chips are in everything, Mitch. Yeah, I have a ceiling fan. And I'm like, you turn it on, and then it looks, and it kind of does its thing. And my brother-in-law's here, and he's like, that's the chip. It's figuring out, which speed and stuff. So I'm like, we have chips in there's literally a processor in my ceiling fan. It's in everything. So chips are in everything. I mean, obviously you got to pick the right chips, just like, I like all dressed or salt and vinegar or dill pickle. I don't like
that's an old one.
That's a bad thing. But I think, if you're buying chips, obviously I think Qualcomm's got a place. I think there's a place for a lot of them. I think there's a place for Marvell. I think there's a place for AMD and NVIDIA and Intel, and I think there's a place for a lot of these. I think chips are not going away.
What are your favorite chips?
I gotta go dill pickle still. Dill pickle.
Really?
Yeah, what are yours?
I
Dill
get
pickle's pretty awesome.
Doritos, barbecue.
Oh, well, Doritos are good. You were saying chips.
Guys, I'm moving this on. Let's go.
Oh, okay.
Roku.
Thinking
loss
about
of-
us as Chips
no,
Ahoy.
wait
Those
a
are pretty
second.
good chips too.
Wait a second. And French onion dip. I gotta alert
That
our
hell of a good
traders
dip
here.
is a hell of a good dip.
the sour cream, the cheddar
Feel
sour
good
cream.
for your heart.
Oh yeah, the heart loves it.
118. You guys got to keep an eye on 118, you bulls out there, because there was 3 highs at that area. We're trading there in the pre-market. Doesn't look like it wants to go down at this point, but 118, you had 3 highs there in early August, and then you get into this candle right here, and I don't know where you're going to stop in that candle, because some people got caught in that one, man. That down day after the gap down. So 118, that's my level in Qualcomm.
Never buy the rep, never sell the dip is pretty much where I'm at. And then I'm either buy the dip or sell the rip. So Qualcomm ripping, I'm not buying it up $6 here today. You get a dip back and you like the earnings. There's always checkbacks. We're just not in this market. We're 2020 and the stock that goes up 6% goes up 60%. We're just not in that market. We're still not in that market. Even though the bulls have grabbed control, it's just moving us from sell the rip to buy the dip, not necessarily buy the rip. Buy the rip worked in 2020. We're not in that market.
Roku EPS $2.33 at a loss there. That's not a gain there versus an 88 cents the prior year. Sales of 912.02 million beat the 855.16 million estimate. Earnings revenue grew 20%. Active accounts jumping and the shares surging here. What do you guys think? Roku with the big bounce back.
It's a squeeze. I don't know what the short interest in is here, but this is a stock that some people are short. So we're squeezing them a little bit. Low expectation. Stock has been killed. I don't think this is going to my long-term portfolio. Again, I still think it's kind of like TiVo Part 2, so I'm not a huge fan of this long-term. So short-term, I probably would be selling the rip, but I'm not shorting the rip on this because it's already, squeezing a bit. And bulls are in control here right now. Stock could continue to go higher. But you're looking at this, been in a downtrend, overhead supply coming in. I'm not buying it up 19%.
If you're paying attention to your dailies and you're looking for some confluence with the pre-market high, your pre-market high comes in at 71.78. That was 71. Do I have that? Yep, 71.78 at 5:30 this morning. And then you got this daily high right here at 71.46. So a little confluence there. Only one top there, so you can't get real carried away with it, but it is coinciding with a daily high. Next daily high is way up in the 73 handle. So keep an eye on taking out that pre-market high for you Roku traders.
2 stocks, 3 minutes. Let's keep it flowing.
I like it.
Here. Q3 adjusted EPS at a loss of 55 cents versus 91 cent positive last year. Man, revenues at 725.3 million, missed the 768.3 million estimate. Solar Edge on power down mode.
This
Power
is
down,
just the
power
disaster of the market. Solar stocks, financing issues, everything here, debt, you name it. They got problems. People can't afford it. They can't
Remember
afford the financing.
yesterday, FSLR mentioned might be a good short.
Faded. Yeah.
You just can't touch solar. Again, we're so oversold in this sector. There may be no sector that is more oversold than solar. It might be the most oversold sector, but man, it deserves it because these earnings are just turning into a disaster. Sunrun reports it's down there too. I mean, I think you're too late to short these stocks. I just can't, come in here and start buying because the risk reward here, the risk is just too incredible. Could they bounce? Are they oversold? Will some people make money on bounce? They already have. So Edge got down like $57. So somebody already made 10% on this. It already has bounced, believe it or not. But what a disaster. What a fall from grace. This we should have seen coming a long time ago. When rates start to go higher, you just can't own stocks like this.
Great report to kind of keep an eye out for. I'm going to keep us moving, Joe. I think
I'm just going to say, I just want to say that you talk about oversold conditions.
Mm-hmm.
I think this stock and this sector may be the most oversold sector I've ever seen.
It is.
Lithium
But
too,
when
Joel.
I see,
Yeah.
My lithium stocks are
Let's
just
not talk
killed.
about lithium.
Well,
They're
Okay,
gonna.
guys?
Everybody wants to beat me up always. I know those lithium stocks. The 1% of my portfolio is really hurting here. It's now down
Now
to
a
half
half
a
a
percent.
percent.
But
Yeah.
well, and again, it's my bad. They were bad calls. ALB, LTHM,
it's
disasters.
just
My long-term
timing.
portfolio.
I think in that case, it's timing.
As
Oh,
soon
you
as
guys
I
should-
sell LTHM and ALB, you got to go buy them because that will be the
Yeah.
bottom. When I
Thank you
sell
for
those
letting me
stocks on a
know that,
long-term
Dennis. I'm
portfolio,
putting that on the chart right
Yeah,
now.
one of my stocks, one of the few stocks I sold, 3/4 of the position in the
and
20s.
me and Mitch talked you into
You
holding
hold
on to
on
it.
Hey, for a
but I
little
had to
while it
sell.
went up. For a little while it went up. But then
Yeah.
the key is that the
guys.
lithium story and the EV story, everyone made such hype of it. Oh, it's going to be like 2 or 3 years down the line. This isn't going to be next year. This
Dude,
is going to be the year
It's
after that.
cyclical, Mitch. This is the
Something
problem.
back
Is
down.
it's cyclical. As much as we hate the automotive companies, these are suppliers to the EVs. We got
That's
Ford
exactly what
throwing in
it
the
is.
towel basically on EV. I mean, we keep thinking EV is going to take over and everybody's going to be driving an EV, and Ford doesn't know how to make them profitably. Tesla's just genius because none of the other companies know how to do it profitably. And how are they gonna? At those labor costs. So I think you're right. I think it's just decreased demand for EVs here because one, we are going into a recession despite the stock market rally.
Everyone
recently.
was like Bill. I'll give it to you. Everyone was talking lithium in 2000, thinking that it would be by this time already taken off. Everyone driving EVs everywhere. That's not what's happened. Let's go to an interesting report that
It
has
isn't,
flipped
and
here
I'm
from
punished
this
for that.
morning. I think this is an important thing. You guys always talk about this. Reports that get hit and then come back before even the open. Airbnb doing that right now. Q3 adjusted EPS $6.63 beats the $2.10 estimate. Sales of $3.4 billion beat the $3.37 billion estimate. But they did warn, of course, about the economy volatility and dampening travel demand. They did see fourth quarter revenues in the range of $2.13 billion to $2.17 billion against a consensus of 2.18. But as you guys can see from the chart, it's already coming back.
Yeah, little pop.
This is what we were talking about, Joel. I'll let you talk in a second, but this is such a good example. They're buying the dips on the earnings reports, the ones that are weak now. This is the mentality that's changed. A week ago, you didn't see this. They were selling the rips. Now you're seeing them buy the dips on the earnings reports. I mean, Generac was a turning point for me. To see GNRC, which was not a good earnings report, rally 10% on that. I mean, it's telling you seller exhaustion in some of these stocks. ALB, we can bring it back to the lithium stocks. This is an epic disaster. LTHM reported the day before, epic disaster, terrible earnings. Again, cyclical businesses, they're suffering. But you know what? LTHM actually bounced yesterday, and ALB has tried to bounce here too. So they're even buying these getter earnings. And talking against my long-term portfolio here because both those stocks have been disasters in there. But when they start buying the trash, and these two stocks are definitely trash, you can see that. This is where we are right now. We're back to the buy the dip mentality. You can clearly see it. The evidence is there.
Anything on this chart you want to give, Joe? I want to go to an interesting one that you have next.
Boom. I just want to say, Gordon just cut his target on SEDG to 35.55. So
Hey, Gordo.
We just talked about so many stocks. What stocks?
No,
does
I don't
have
think
any buy ratings on anything?
No,
I don't know.
He's a perma
I'll
bear.
call him.
He's a perma bear, man. He's a perma
we love
bear.
Gordo.
He comes out the cave and mentions the stock and goes back to the cave. But let's go to PayPal here. I think Joe has some interesting comments on this one. I was also talking about this yesterday. It was so beaten down. A little part of me wanted to buy it, but it's so hard to buy earnings reports before they come out, right? Q3 adjusted EPS $1.30 beats the $1.23 estimate. Net revenues at $7.4 billion beat the $7.384 billion estimate. They do see Q4 net revenue growth at 6 to 7% and see adjusted EPS at $1.36 versus $1.32. They did see they added a share repurchase and expected to reach 5 billion with about 4.6 billion of free cash flow. Now, what the really interesting comment that I saw in the report was the PayPal CEO saying that the company will look to grow revenue outside of transaction-related volume over time. So I think they even see the writing on the wall in that transaction business, and they're starting to adjust.
It's
nice
just
pop
massively oversold. I mean,
wow, what happened here at 8:30? Holy mackerel! What happened? Do we have some data here? We just blasted off again, Dennis. Do we have some 8:30 data there?
Maybe we did. I don't know.
I mean,
We
there's
popped
so
4
much on the
points.
tape, man. Let's keep up with it here. I got you. We got some.
That's last week's
8:30.
high we just hit. 42.90.50.
Bulls have grabbed control here, folks. Bulls have grabbed control. If you're short stocks, you need to cover 3 days ago when TLT started rallying.
I don't see anything at 8:30, man. I'm looking.
Someone said something positive somewhere about
Jobless claims. Jobless claims came out 217 versus 214. So jobless claims.
I mean, let's just be honest. That's they're just riding the wave right now. I don't think
It wasn't. So, anyways, we popped 4 handles. We wasn't a huge 40-point pop here.
TLT.
We were already up
going
30
up,
handles.
dude.
We popped another 4. So back to PayPal. PYPL is way oversold. It's probably as cheap as the stock has ever been on a PE basis. Like, is it even trading 10 times earnings? Let's go look here. I just want to go Trusty Benzinga Pro, go to your details, PayPal, looking at the earnings, EPS, PE is 9. The forward PE on this is 9, Joel. PayPal's never trade. I'm going to say PayPal's possibly never traded with a PE of 9 before, under 10. It's half the market multiple. So they are obviously pricing on a lot of bad stuff to happen to PayPal. I don't know if all that bad stuff's going to happen. I kind of think you're buying the dip on this one.
There's not a dip.
And it's ripping today, so that's not the day.
Right, I know. You're not buying it. You're not buying on the rip. Premarket.
Well, I don't know. Maybe you almost should.
55,
It's not
70.
that much of a rip. Maybe you should buy the rip on this one.
55.70. So you're gapping up into this area. This is the candle you need to focus on that day. You had a high at 56.40. So that's the next target. A target above that would be in the 57 handle. Just a comment. I did a little research on PayPal and Square, and I don't know what the rules were before. But if you're receiving, I believe, over $600 on PayPal, and I don't know if this started last year, you're going to start getting 1099s. So I think a lot of people were using it. And I'm not necessarily saying for money laundering purposes or whatever, but I think that a lot of people were trying to get around the tax. So be careful on that. I don't, if it's over 600, someone paid you, you should get a 1099. I don't know if it's a larger amount above that, but that, and also the other things concerning about this, I mean, PayPal and Square used to be Bitcoin stocks, right? And man, they just weren't rallying with Bitcoin. So I think some of the money's left off coming off the platform because
these were never Bitcoin stocks, though people thought they were Bitcoin stocks because Square, and was going to have and transact in Bitcoin, and PayPal was going to transact in Bitcoin.
I mean, you can buy
nonsense.
You can buy it on those platforms, Dennis.
Yeah, but these aren't like Bitcoin plays. They had these chalked up, and you can clearly see that.
I remember when these dropped. I remember when these dropped, at least from their really high. That was in October of last year, and it was a mention on Bitcoin on Visa, and that started bringing all these down. It was with Visa, MasterCard, and all of a sudden Square and PayPal started getting hit harder than those. Visa and MasterCard turned around, but those kept falling. I just remember that catalyst. That was last year.
And how much, to Crassie's point in the chat, how much is Apple Pay hitting this thing now too? We talked. It was a reason I sold my PayPal stocks years ago. Sold it way too soon, but I was concerned about Apple Pay coming in and eating their lunch. I think that some of these eating of the lunch is happening seriously to PayPal too. So there's multiple reasons. One thing though is it is cheap and it is oversold, and right now those stocks are moving higher.
All right, guys, I think I know why we moved on there. I don't think it was the jobless claims numbers. What I'm going to bring in here is something that we don't talk about often, but it's the non-farm productivity number. And so I think that this is showing, and I'll show exactly why I think this is it, because it's showing that unit labor costs in non-farm business sectors decreased 0.8% in the third quarter. So essentially that wage inflation that we're looking for, this shows a decrease in wage inflation.
Oh, that's good news.
So that's good news, right? That would maybe help the market out here. I don't think it was a jobless claims. Of course, this is my analysis of what I'm seeing just hit. And we don't normally talk about non-farm productivity, but I think that this definitely came in higher. You can see it, 4.7 versus a 4.1 estimate, and the prior being 3.6. So big jump there in non-farm productivity. You're on mute, Joel. The old.
We got our guest coming on here too. So guest is in the background here.
Okay. All right.
All right, so Dennis and I are going to hop out. Let's
Okay.
go ahead. Let's put Joel full screen here, and he's going to introduce our guest today, guys. Take over, Joel.
Okay, we're going to bring on Richard Selvala Jr. He's the CEO and founder of Harvest Volatility Management. He is a big Michigan man as me, but we won't talk about that today. There's a lot of other things going on. Let's bring on Richard. Hey, Rick, how you doing?
Good morning, Joel. Doing great.
Good. So just a little background. He is the founder and CEO of Harvest Volatility Management. So I just want to talk about volatility in a broad sense here, because you talk about asset classes, right? And Bitcoin burst onto the front. Many are considering that a new asset class. Where do you put volatility in managing volatility? Is it truly an asset class?
Yeah, people make that argument, and I can make the argument. You can certainly have a strategy where your returns are based on managing volatility, changes in volatility, views on volatility, and you certainly have hedge funds that are volatility based. You can look at things like the VIX, which is negatively correlated to the S&P, which makes it interesting to many. And there are other advantages of volatility, and really what we trade is more options. And so we trade options on the S&P 500. And so volatility is a big part of what we do, but we don't trade volatility as an asset class per se. We use options to try to reshape the return distribution. So if we can, cut off the left tail of returns, or if we can add some incremental yield in a hedged fashion. So we really use options to help reshape and try to improve the return stream, of a client's portfolio, rather than really trading volatility as an asset class.
Okay, so your clients are custodial at different brokerage firms, right? And so
Correct.
you're using their capital in the market environments. It's just kind of, if someone, comes in with today and has that X, portfolio, just kind of like X amount in their portfolio, just kind of walk us through the steps and what you actually do for your clients.
Sure. The nice thing about our strategies is they're overlay strategies. And when we talk about an overlay, it doesn't require you to commit capital. So you don't have to take, you don't have to divert, investments away from something you're already in. You can take your existing portfolio, and then we utilize the margin, or at least some of the margin capacity in your portfolio. So think of it as having a home equity line of credit that, as long as you don't draw on it, you don't pay for it. But there is that line that is, sort of the backup in case there's a loss. And but when we do our first trades generate a credit, right? So if we're selling an out of the money put spread, we collect premium with, collect premium up front with a known quantified max loss potential. If we sell an out of the money call spread, the same thing, we collect premium, with a finite max loss potential. So what we do is we, talk with clients. We take a look at their portfolio and their views and their objectives. Most clients like what they have and are either trying to add some additional yields to that portfolio. So think of it as, door number one is your portfolio and door number two is your portfolio plus 2%. Most people would pick door number two, and we try to help deliver door number two. Others that we encounter frequently they know they need to be in the equity market, but they're nervous about equities. There are plenty of things that give them pause. And honestly, most of our clients aren't looking to get rich. They already are rich. They're looking to stay rich, and they want their assets to just work harder for them, instead of just sitting there in the bank or in their brokerage account. If we can help make those assets work harder for them, and add a little equity upside with hedge downside without having to commit capital, it becomes a very interesting thing, especially with interest rates having backed up the way they have. All of a sudden, bonds look kind of interesting. Even money markets look kind of interesting, kind of viable for the first time in a long time.
Long time. So you've had different capacities on Wall Street. You've worked for General Motors. You've worked for some big houses and everything. But you decided to go on your own in April of 2008. What an interesting time to
Yeah.
venture out with a new. So just, I mean, we have some younger listeners, we have some older listeners here. Just talk about, starting in that market environment and what you learned. And during our discussion, you told me there was some major ups and downs here. Just, start out talking about starting at that time and what valuable lessons you learned that have helped you with, your what you're doing today.
Uh, yeah, interesting time for sure. You know, the if I had known that the global financial crisis was going to start 6 months later, I probably wouldn't have started in a short volatility strategy. And so to go into a strategy that it's effectively short vol, although we're hedged, and just before the VIX, goes from its sort of long-term average of about 20, and for the first time ever trades 80. That was obviously a very challenging time. And we had a couple of negative months, although, and to be down, 1 or 2% when the market's down, 20, 25%, was a validation of what we do. And the fact that we then, our best months follow our worst months, because when you sell volatility and then it goes up, it's bad for this month. But now that it's higher, you get to sell again and benefit from that. So the fact that we not only survived during that period, but actually, November and December of 2008 were our two best months. It sort of validated the strategy, and it also knocked out some of our competitors. And so while it was a challenging period, don't get me wrong, the fact that we got through it with real client money, not backtest money, really helped our story and helped open up some eyes. So, the real key, I would say, is you need to be prepared for the unlikely, which is why we always stress test everything. And we can see moves that who thought 2 days ago that the S&P would rip 200 points in 3 days. I mean, after closing down near 4,100, now we're knocking on the door of 4,300. You just don't know. So being prepared for big moves in either direction is obviously helpful.
How did 2020 treat you?
2020, very interesting. So the fact that we're always hedged, that we never sell a naked option. So when the S&P dropped close to 35% from late February into mid-March, sort of a 6-week period, we were negative, but the hedges kept the losses very, very manageable. And then obviously we had to bounce back the other direction. And so when you are recovering from a much higher level, I mean, as you know, volatility is the enemy of compounded returns. And the most simple example, if you've got $100 and then you lose 50%, well, now you got $50. If you then make 50%, well, you're only back to 75. As opposed to if you have $100 and you lose 10%, now you're down to 90, but then you make 10%, well, now you're back to 99. So that's a big part of our philosophy, is trying to keep losses contained so that you can recover quicker. And so ultimately in 2020, I mean, we have multiple strategies. Our Iron Condor strategy, which is selling volatility in both directions, was down 2% in 2020. But we also have a sort of a hedged equity overlay, and that strategy was up double digits in 2020. So,
all right, different philosophies with with volatility, but what? Just give us a couple of your core strategies, like when volatility gets cheap, kind of what you're employing, and then on the opposite end when it gets expensive.
Yeah. So we have two main strategies. One we call an Iron Condor. If you Google Iron Condor, we're basically selling short-dated out-of-the-money call spreads on the S&P 500 and short-dated out-of-the-money put spreads on the S&P 500. And so we create this sort of band or this fairway. We can make money whether the market goes up or down, but we can lose money if the market goes too far up or too far down. And that's why we're always hedged. And so we know with certainty the most we can lose on the way up or the most we can lose on the way down. And we also know that we'll always win on one of the two sides. So we usually win on one of the two sides, and we always win we usually win on both, but we always win on at least one. And so the fact that you're hedged and the fact that you're short in both directions, if you will, it helps to mute those returns. So that strategy is only targeting, it's annualized at about 2% over the last 15 years. But that's 2% on top of what you're doing. So if you have a 60-40 portfolio, that's getting you 6% over time. If we can take 6 and make it 8, that's a meaningful pickup. So that strategy it's directionally agnostic. We don't care if the market goes up or down. And from a volatility perspective, while it's more attractive to sell when vol is high because your band widens out and you collect more premium, it also suggests you're going to have bigger swings up and down. And so it's a little more challenging to manage. And so that strategy benefits most from calmer seas, directionally agnostic, and it's an all-weather strategy that can be added onto any portfolio. So if someone's 60-40, if someone's 80-20, if someone's sitting just in bonds, this is a sort of a portable alpha, relatively low vol, managed contained risk, etc. Very low correlation to the S&P. We also have a hedged equity overlay strategy. And so there we're selling the downside put spreads to collect premium with limited risk, but then we're buying upside S&P 500 calls that are longer dated. And so here, it's not as market neutral. We want the market to go up. And if market goes up, we're going to make money. If market goes down, we're going to lose, but we're going to lose less because we're hedged with the put spreads. And so that is just more of a nice overlay for those who are overweight fixed income, especially now. If you've got 2s and 5 years with at 5% plus, you can overlay this on top, and so you've got some equity upside, but you can also sleep at night knowing that the downside is contained at anywhere from 3 to 5%. So
before we let you go,
yes,
just words of advice. And we have all different types of investors out here, and some shorter term, longer term. Just from all your years in the market, the different experiences. If you had to give one word of advice to investors out there, both young and old, what would that be?
Get started. For one, I am a big fan of index funds for those who are getting started and those who are not yet really comfortable picking single stock, doing deep dive research on single companies. So using low cost index funds, and then obviously using overlays to help augment or supplement that, whether you write cover calls against the upside in certain situations, or after a big pullback, maybe buy some upside calls to give you some a little extra juice at a discount, but with limited risk. So.
All right, Rick Selvala Jr. He's CEO and founder of Harvest Volatility Management, and we got a little volatility going on in our sports program right now, but we'll put that aside, and I'll just give you a go blue and hope to meet you soon.
Hope to see you in Ann Arbor this weekend.
Okay. All right. Thank you, Rick.
Thanks. All the best, Joel.
All right. S&Ps are continuing to move north here. Really nothing in sight as far as daily resistance go. We did take out last week's high just very easily off that 8:30 information as we moved yesterday. Next daily high comes in is your October 20th high at 43.0475. Mitch, you want to keep rolling with those earnings reports? Maybe Palantir up nearly $3.
Yeah, let's go to this one. Of course, Dennis and I were talking about this one just the other day.
I thought about it. I had it written on my sheet. I was going to buy it ahead of the earnings. It just felt like with the turn and the AI story here potential, I was like, you know what, it's back down near support. I'm like, even if it dips, I think probably the dip gets bought. And I really thought about it, and then I didn't do it. I didn't have the guts, and I'm mad at myself. So I look at this up and I want to vomit, because I really did think about buying this right before the print yesterday, like at 350. I was looking at it. I was like, I kind of want to take this long into the earnings. Man, that would have been a good day.
EPS coming in here at 7 cents, beats the 6-cent estimate. Sales of 558.16 million, beat the 555.36 million. They did raise fiscal year 23 revenue outlook from 2.21 billion to 2.216 billion, and then the high end of 2.2 billion.
This report was just okay. It wasn't even like blow it away, but just the market. Right today is the correct day to report any earnings. I mean, we have some disasters today, like reports that were not good whatsoever, and some of these stocks are not down that much. So, I mean, this is just a good day to report anything. You're saying anything okay, they're rallying. I mean, across the board, Palantir. We haven't got to Shopify. It's up 15% here today. I mean, there's so many storied stocks of 2020 that, in 2021 had really, catching fire today. Roku, a lot of these stocks that have really been beaten up. And again, Palantir and Roku and Shopify have been beat up. They're getting nice pops here today, and they're relief pops, because you know what? These earnings were pretty good.
Nice area coming into. You can't ignore this $18 area. I mean, you have 5 highs right in that area. You haven't hit it yet in the pre-market. So keep your eye. I mean, the range of the highs here are from just under 18. The upper part of the boundary comes in at 1844. So let's see if the 18 handle brings out any sellers in Palantir up to 73. That's a 18% move.
It's very rare stocks that I think about investment, and I really got to listen to myself sometimes. Dennis, why didn't you give me a good whack on the head? Shopify, baby, Q3.
Me and you, man.
Adjusted
We screwed
EPS.
this stock
We
up
tried
so
the other
many
day
times.
with you, Mitch. We
I
tried the
know.
other day with you
Joe
on
tried
the
to get me,
show.
straight, but sometimes I just don't take the whack.
You got it.
This stock in the 40s is just an eternal buy, it seems like. Every time it gets down to the 40s, you just buy it and you
just
make
let
money.
me know when it's back down there. But their
Yeah.
EPS coming in here, 24 cents, beats the 14-cent estimate. Total revenues at 1.7 billion, beat the 1.672 billion estimate. And Shopify getting the lift here.
Big
It's a
old
big move. I don't think you can chase it here. Like,
that's
like
hard.
again, maybe they continue, and we have seen some of these moves continue, so you can't necessarily short them. I mean, Arista Networks, ANET, that strong stock, opens 188. People say, "Well, we're just selling reps." You can't blindly just sell reps on, anything that's, especially stocks that are near all-time highs and in the tech sector. So that continues to break out and make new all-time highs. Amazon, same thing. I mean, it's been bought since the earnings report. It gapped up to $10 up to 125 on earnings. It's tacked on another $13. So I mean, you can't just come in here and say, "Yeah, I'm selling short shop. It's going to come back down." Bulls have grabbed control here, folks. We're not selling rips. We're buying dips at this point in time.
Sorry, I'm just giving you resistance in these things, but it's just, it stocks up $8. I mean, it's hard not to. You got a big old move. Pre-market high is right at the $58 area. This is filling a gap back from September. The high on that day was 58.70. So if 58's not good enough for you, look at 58.70. Longer it takes to take out that pre-market high at 58, you might get a little bit of a retreat. But the top of yesterday's range, we can forget about seeing that, 48.86.
All right,
Can
guys,
we
we only
do
got
Eli
6 minutes.
Lilly? Can we do Eli Lilly? Because I know you think it didn't do anything, but you got to see this pre-market chart, Mitch.
I mean, there's other charts moving right now. Starbucks is moving,
Mitch,
so I wanted to kind of bring that up. But
this stock lost $40 this morning. I'm trying to do it and when we look at it, it's up $7. It's not moving. This stock traded 515 this morning, down 40 points on that headline number. This stock is now up $7. If you think this is an example of buy the dip working, holy mackerel. Did buy the dip work here? Buy the dip just destroyed it here. This is the best stock of the day for buy the dip. I mean, so you can just look at Lilly and say, yeah, it's not doing nothing. Who gives a crap? This was 515 on the number. The algo headed down to 515.
the report wasn't good here, though.
It's 10%. 10% off of the lows.
The
This
report
rally
wasn't
just
good.
10% today.
The guidance
good
was
at all.
actually pretty bad
Not
here.
good at all.
Fiscal year adjusted EPS guidance here of $6.50 to $6.70. The prior guidance was all the way up to $9.70 and $9.90.
It was a disaster.
The consensus was $7.97. So even the consensus was down, like they brought it down a pretty significant amount from that prior guidance, closer to 8. And this came in below 7.
This is unbelievable.
This is, you know what this is? This is all that like kind of, this is all that just belief in the weight
on the
loss
drug,
drugs.
then the next drug.
Exactly.
And they don't care.
Yep.
They're just using it as a dip
Exactly.
to buy. But just
They
showing
just used
you
it
how
as a buy.
this is a perfect example of how the mentality of this market has completely turned from 1 week ago. 1 week ago, it's completely turned. Stock disappoints, lowers guidance, goes down 40 points, and they buy it back 2 hours later to be up $8. Joel, this is nothing short of incredible, this comeback in Eli Lilly.
Well, Dennis, I mean, you were looking at the October 3rd low of 516.57.
Bounced right off that.
And it went a buck 67 through
Wow.
it and then right back up. So that's revisionist history. Now let's just take a look at a little bit more technicals that will come into play here. You are above yesterday's high. I mean, this thing is going to be all over the place. So let's hold 558.5 on the upside. That was yesterday's high. And then you're I don't know if you can get to the 2-day high or at 569, but you could definitely see your 2-day close. You did see that at 553.93. What a wild ride in Eli Lilly.
That might be the most wild ride of the day, especially with what Mitch said, lowering the guidance. It's the hope on the drug.
Yeah,
And
it's
Algo's
the
just
hope,
like, oh,
for
miss, guide down, we sell. And they didn't consider, yeah, but that drug is coming.
I like this comment, and I'm gonna go with you, Rob. I'm a little bit of a bear, so I'll go with it. Will Lilly become the new Moderna? Ooh, will it just go up
No,
on
nothing
the back?
to do with each other.
No,
Nothing
but
to
what
do
we're
with each
saying
other.
is that, like, let's say there's such hype for these weight loss drugs, right? Do they eventually not have that hype, or do they have side effects that are negative, and all of a sudden they sell it back off? I mean, they're definitely getting a crazy valuation lift based off of that, and it still hasn't gone to like just massive use, right? So that's just what I would say, and that's
Hasn't
why the
gone to any
comment is
use
coming
yet.
in. Let's go to Moderna. You guys saw that loss of $9.53. Wow, man. The comparable was a loss of $1.93. Just to put it in perspective. Estimates, of course, just getting destroyed here. Their sales beat, but that didn't matter because of their loss here, of course, because of the COVID vaccine and resizing write-downs.
$3.6 billion loss on COVID supply write-downs. You know why? Because not very many people are getting the shot, which we've been talking about on this show for a while here now. Obviously, I didn't consider how much of Pfizer's revenue. You know, I got hit on that side of it, but I've not liked Moderna or BNTX for a long time here now.
BNTX is going to be
And
good.
NVAX, the COVID, but the pandemic is officially over. I mean, who even said it? So, you know, when the World Health Organization's, you know, officially declaring the pandemic dead, that was the final nail in the coffin for all of these stocks. That's an unbelievable loss here. But again, because they've got all these shots, the people aren't getting, so they're throwing them in the garbage.
Coming into an area where it was back in November before it took off, and I think we mentioned this before, a pair of monthly highs at 66, going back to October and November of 2020. That's what you're looking at. Haven't hit 66 yet, but man, only $1.29 away if you're looking at that for a target on the downside.
All right, let's do Starbucks. That was ripping even in the pre-market here. Starbucks, of course, EPS $1.06, 92-cent estimate,
big
beats
move
on
too.
sales,
That's a big
comparable
move.
sales plus
Wow.
8%. North America plus 8%, plus 5% internationally. What I saw was really interesting is their margins actually increase. So this is what you want to be seeing if you're looking into retail, I feel. Look for those margins to increase, and they should probably get the love based on that. Their operating margin jumped to 18.2% of sales from 15.1% a year ago. How'd they do this? They drove operational efficiencies, sales leverage, and pricing, of course, going higher to help those margins.
It's historically traded with a PE of 30. The PE is down to 22 because the stock has just been beaten up. Again, so many stocks oversold. We were 115 down to 91 in the last 5 months. It's a huge sell-off, 25 points for Starbucks. This isn't like some little startup company here. So, when we've seen it with McDonald's too. McDonald's has come off significantly from the highs. It has bounced recently. But I think you just got a lot of stocks that are just oversold. And now they're getting the relief pop on the earnings, being okay.
Nice area up here at 103, way up here on the charts. I do see going back to August now. You're going back to levels you saw in August, and I see a pair of highs at 103, 102.96, 103.16. So if you got some options, just potential resistance there above that, 144, 104.46.
All right, last thing, I just want to bring a little fun topic. Joel caught this one. I thought it was really interesting. Cedar Fair and Six Flags combining to operate under the name of Six Flags and trade under the ticker symbol FUN on the New York Stock Exchange soon enough. Take a look at Six. I don't know. Is this a negative for Disney? That's where I'll play it. What do you guys think about that?
Zero effect on Disney. Zero. They have no effect on Disney.
Isn't it competition though?
No.
Six and
Cedar Point.
Fun?
Cedar Point, Six Flags, no competition for Disney
Different
whatsoever.
people.
These
Yeah,
are
different.
thrill ride parks, and those are theme parks. A completely different animal. Disney has its own problems. It doesn't have to worry about Cedar Fair and Six Flags. These have existed, so they merged together, probably more out of necessity. Coming out here, mergers out of necessity, cutting expenses. It probably makes sense. Zero impact on Disney.
Yeah, I don't like either of those places, so real not too much interest. But they both got
Disney
nice.
has its own problems.
Yeah, Disney's has own problems. These both got nice pops, but like as Denny said, they're not doing this, because they, it's necessarily the best thing to do. I think it's a lot do with skimming down operations and costs. So,
Yep.
all right, I'm gonna hop out of here. We're trading right near the highs of the pre-market session. We took out last week's high. Looking at the 4,100 handle last Friday, knocking on the door of the 4,300 handle today. So, good day to report earnings. Also, bonds now up over 2 points here, over 112. So that's helping us out. And we'll bring on a guest tomorrow we haven't talked to in a while. She's back for some of her travels. We're going to bring on Anne-Marie Band. So,
awesome. Love
yep,
Anne-Marie.
everyone have a great day out there. And we'll be back. The closing print today will be done from none other than Ann Arbor, Michigan. So join me and Triple D at 3:30 for the closing print to see if market can tack on some more gains.
Quickly, just 1 minute summary here. TLT is absolutely ripping here, Mitch. This is the driver of the market here right now. We are up 2 points. This is one of the biggest up moves in TLT that we've had.
It even told us yesterday, Dennis, when the SPY tried to make a down move, the Qs tried to make a down move, but the TLT was continuing to climb.
That was your tell. TLT is the tell, folks, and this is real. It's now above 85 significantly.
Yeah, they're pushing it so far where you don't want to chase it, right? Like at this point, it's hard to even come after that. That's a big run already in the pre-market.
The rally is real here, folks, and I think you look to laggards. I think you're combing the ditches right now and looking for stocks that haven't gone. So that's what I'll be doing here today. So obviously Shopify's and the stocks are up 20%. I'm not chasing those ones. Look to other stocks. Go through the chat right now. Throw out some stocks because there's some that haven't rallied yet. And I think you're going to start to see that. I think about the airlines. The airlines haven't rallied at all.
Okay.
They haven't rallied at all.
Marriott's report came out today, and that didn't really move, so that's a little bit concerning there. But just to kind of mention one, right?
I think you're combing. I think with your trading cap, not investing cap, trading cap. I think you're just simply looking for laggards here right now because stocks have ripped higher, and what they do is when they've missed, they start going and grabbing everything that hasn't moved yet. So, and you can see it clearly with some of these stocks, that disappointed earnings are even buying those dips. Right now, people are panicking that they've missed it, and maybe they have. But I think you're looking through and looking for stocks that have not went yet and buying those stocks, at least short term.
Yeah, and look for things that have been on a nice kind of pullback, right? That's why right now I'll say, don't be fighting too much of that financial move higher because if the market's going to continue driving, those banks could drive a little bit too. Energy will be something to kind of keep an eye out for. XRT is what I'll be looking at. I'm looking at retail names to see if we get some seasonality going into the end of the year. We've been talking about this for a couple weeks now. I haven't seen it really lift. I played it multiple times. Amazon, good report. Shop, good report. Starbucks, good report. I'm going to start looking to see what happens today to a stock like this.
Yeah, I think you're just going around and you're seeing. And again, if Apple disappoints tonight, there's going to be buy the dip out there on anything
Apple
tech. So
tonight.
if you get a dip off of Apple's earnings, unless they just throw in the towel and like it's just an epic disaster, I don't think it's going to be. But I think there's buy the dip mentality across the board here right now. Bulls, as much as Bears were in firm control here last week, Bulls in complete control here right now. I'm buying dips.
Yep. All right, guys. Like always, keep up with Dennis Dick, Triple D Trader. He'll be on the closing print later today. Have a good one, Dennis. All right, guys, I'm going to wrap it up. Of course, like always, all content is for informational purposes only, not to be used as investment advice, and opinions do not represent those of Benzinga. Host and guests may maintain positions in the securities discussed today. Like always, guys, stay safe out there. This is for educational purposes for you guys to learn from the best, right? That's why we bring Dennis Dick, Joel Elconin to you guys every single day. Smash the like if you guys enjoyed today's pre-market prep. Tried to get through all the earnings. There was some that we didn't touch. If you guys want to hear about those stocks like MicroStrategy, I heard some people asking about Penn, different stocks out there. Well, keep up with us on live trading. We're going up next. We've been doing a live trading competition. Guys, check that out. Had a really good day yesterday. Going to keep battling. Check out what we get after today. Hit the like button, and I will see you guys in just a few minutes on, of course, live trading. Don't go anywhere, team. As we keep battling on the day, I'm going to have a lot for you guys today, and catch the Apple earning call right here on Benzinga. So hit that subscribe right now and wait for that video tonight. And if you want to get notified on that video, we already have it up. So you guys can click on that, hit the notify me, and check it out, guys. Like always, Apple earnings call tonight right here on Benzinga. Smash the like, team. We'll see you next time.